AI investment, which soon might just be called investment, is just unrelenting. So the last episode, I was making the argument that, yes, AI is going to have a big impact on the world, but it really hasn't yet. The infrastructure is just not quite there yet. It can be expensive to lay out all of that infrastructure. And we're starting to see some real concrete signs of that, to the point where even the Fed now is starting to talk about AI as a source of inflation.
It's the root of all evil, of strife and upheaval.
Yeah, I didn't hear about that.
The prevailing wisdom, I think, that we've been talking about on this show, that the Fed has been talking about for months. It was certainly something that Warsh was hammering home when he was, interviewing publicly for this job for so many months. But it's this very optimistic view on AI that, at least over the long term, it has the potential to bring out a profound productivity boom, ushering in such great abundance that inflation just simply won't be a problem anymore. But we're starting to see some of the growing pains of getting there. The sheer scale of the physical and the digital infrastructure that's needed to operate AI is creating this new source of demand that really wasn't there before. And it's just huge. We just hear continuously about how many trillions of dollars are getting earmarked for all these different expansionary efforts that technology companies, now increasingly even non-technology companies, are taking to use AI more. And we're seeing that it's getting really expensive. So while over the long term, we may very well see this productivity boom, I definitely still think that we will. It's just going to take a while to get there. But we've got this uncomfortable backdrop right now of just this stubborn inflation for 2/3 of a decade now that we just haven't really been able to kick yet. And now, at a time when we're still dealing with new sources of inflation. We've got energy now. We've got geopolitics, tariffs. Now we've got potentially another adding to that mix. So if we get this long-term productivity gain, it's going to be really good, but we might have some more inflation issues along the way before we get there. This week, June CPI. Did you see it, Luke?
No. Nope.
Oh, really? Okay.
No,
good.
yeah, I've been eyes deep in like earnings stuff.
If you had to guess, what do you think the CPI looked like?
Well, I think it went up a little bit.
Went up. CPI spiked so much recently, kind of for one main reason, at least the headline, for one very visible reason: the price of oil, and how that's filtered through consumer pricing for energy. But so June was when the Iran memo of understanding was signed, and the price of oil came back down to almost the level before the war began.
Yep, I did see that. It was like 70s, 80s or something. Yeah.
So that's like the June CPI reflects that. So the expectations were that it was going to fall down a little bit, but in fact,
it ticked up. Right. That's what I said. That's what Joe. You're looking at me as though I said something crazy. I was right.
Well, did it go up? You did say something crazy.
Oh, all right. Oh, it's not that bad. Great. No, great.
Yeah, it came down. It came down substantially.
Okay.
So going into it, generally the expectation was that it
Wait a minute. You like did this whole like lead up thing talking about how all these new upward pressures on inflation and stuff, and then you're like surprised that I was like, oh, so I guess this thing is ticking up.
That's the story I'm trying to tell, and that's the weird thing right now, because this is where we're at today. Inflation does look really good in June, but there's a lot more under the surface that it's kind of hiding.
All right. Well, walk me through. Someone might think that, Warsh is working super fast and he's already sort of put in his different calculation for inflation. Median, trailing, whatever that is, the millionth, the 500,000th and first price.
Right.
And all that. He did it.
Mm-hmm. Well,
it's all about, yeah. People really need to understand how much power like the bureaucrats underneath that actually like write what the calculations are have in terms of like, oh hey, look, inflation looks great. But yeah, this is probably a little too short notice for something like that.
Definitely. I mean, any actual underlying changes to the methodology would be super slow to implement, number one, but very well publicized and discussed leading up to it. Yeah, and so here's the year over year. So it fell by 0.4% on a monthly basis. Year over year, that brought us to, what is that, 3.5% headline. So the expectation was that it was going to come down a little bit because of energy prices.
Let me ask you something. Do you think I can get away with wearing this at work? If a colleague, how much crap would you give a colleague if they came in with this? I'm bringing my authentic self.
Yeah, so this is the reason CPI was so low. From the start of June till the end of June, oil fell by 25%. That's it. Although it came down so much, there's a bunch of reasons to not read too far into this. Like, number one, this whole agreement is kind of slowly falling apart and oil's been rising very quickly again. The piece of good news, though, is that in addition to headline with energy, the core component, which removes energy, also came down quite a bit, more than expectations. So there was a decline in both core goods. Maybe that was related to tariffs a little bit. We already saw the pass through. They've declined overall since the Supreme Court ruling. But most important to the Fed, services inflation.
Oh, really? Yeah, those have been like super stubborn.
Mm-hmm. Yeah, that's been like the one thing that like we just haven't been able to get down since since this began in.
I want someone. I just paid like $150 for someone to get rid of a little wasp nest, and I was like, no way, that's what it cost like however many years ago. Yeah, services are, man, those are a killer.
Energy, top line energy down 5%, gasoline down 10%. That's basically the root, if you will, for this very positive inflation print. And so that's something that Warsh was very careful to talk about during his first semi-annual testimony to Congress this week. Did you hear anything about that, Luke?
Yeah, I did actually. And I tried watching it in the background. And then Warren got up and just started ripping it apart, and I couldn't listen to it anymore.
Yeah. Oh, yeah. Just
$100 billion from what billionaire? Warsh, say it.
Who gave you the money?
I will fully comply with the Office of Government Ethics.
That's not an answer.
Well, it is an answer, actually, Senator, because there are obligations,
and
I will satisfy them completely.
$100 million that you got just before you were sworn in, and you won't tell the American people where it came from. Let's go to another incident. I
was like, all right, next. I don't want to watch this.
So he said a couple interesting things, one of which he was very careful to say that this is not a mission accomplished moment with this really good CPI print. It looks really good, but he kept saying, it's like, we're not done here. This really doesn't mean much. It's just 1 month. Don't worry about it. Separately, he was talking about AI investment and how just it's been this persistent bright spot in the economy.
I want to highlight the most striking feature of this economy right now, and it's business investment. The rapid pace, which appears to be accelerating, reflects in part the construction of data centers and other infrastructure, and the immense demand for AI-related equipment and software. At the Fed, we don't yet know fully the extent to which the economy will benefit from AI. Yet it seems inevitable that that which we're now calling AI investment will soon just be called investment.
There's a little bit of trepidation from the Fed that all of this AI investment could be a new source of aggregate demand in the economy, another inflationary force. And it's just really a kind of a 180, I think, on Warsh's public views before he was in the seat, because it was all about we need to lower rates because of AI. And now he's basically saying the opposite. AI is now a reason to be extra vigilant. He didn't say we're going to raise rates, but through the communications, that's the implication. And market pricing reflects that now.
Yeah, that's a good point. Yeah, that is interesting.
Also, last week, we got the FOMC meeting minutes as well. The one big takeaway that people picked up on was that there was a number of committee members that were weighing the possibility of hiking at the June meeting. No one voted for it, but there was pretty good discussion about it. And then a little further down, they make this connection directly to AI related to the potential need for raising rates.
With regard to the outlook for monetary policy, amid high assessed uncertainty, various participants discussed a range of scenarios for the evolution of the economy and for future monetary policy actions. Most participants remarked on scenarios in which inflationary pressures would dissipate and inflation would soon begin to return to 2%. In such scenarios, almost all of these participants noted that it would likely be appropriate to maintain or eventually lower the target range for the federal funds rate. Most participants, however, also pointed to scenarios in which, in the context of stable labor market conditions, inflation would remain elevated due to strong AI-related demand, the conflict in the Middle East, or the effects of tariffs. In such scenarios, almost all of these participants indicated that some policy firming would likely be warranted to return inflation at 2%. So let's see. Point of scenarios which, in the context of stable labor market conditions, inflation would remain elevated due to strong AI-related demand. AI-related demand. So what exactly are they talking about the price of? Is it going to be like electricity? Like, what is AI labor demand? Tokens?
The cost of tokens and everything else that goes along with it.
Yeah, you think like in their basket of goods, they're going to be like token is going to be one of them? It's going to be like eggs and fish and cars
no.
and tokens? No, you don't think so?
No, I think
I'm paying for it.
So that's like a very narrow definition of it, of like AI related spending. I mean everything that goes into developing AI as well. I think if you're talking about a persistent source of demand throughout the economy, it's not just people buying AI products, it's companies that are building AI. It's building the data centers. That requires land, capital, construction labor, new engineers, just everything that goes along with these huge capital expenditures that are needed to build out these AI products. So one of the kind of closest consumer ones is the price of electricity. So just running these things, that's one direct impact. But again, it's everything related to, it's all the second order demand that comes from building these things, just all of the construction, the engineers, the land that you need, the cooling systems. All of that new demand kind of, on the margin pushes out other sources of demand for those things. They're not the only things that require construction workers. They're not the only thing that requires huge amounts of electricity or water for cooling or things like that. So we're just getting this big blast of demand here in these really pretty general parts of the economy. And, the net effect is these new AI tools. And then on the other side of that, then you're spending on the AI itself as well. So you've got the AI producers, and then on the other side, companies that are just furiously racing to use AI as much as they can, pretty much. We're also starting to see now this shift in how companies themselves are thinking about AI and using AI. So I don't know, Luke, I think this is a technical term. Have you heard about token maxing?
Yeah, I mean, I've heard of all sorts of like weird maxing stuff. I honestly do not really know what it means. Oh, he's cooking maxing. Yeah, what is that? Code maxing or something.
Anything that you're doing, you just put maxing onto the end of it.
What does that mean?
Just do as much of it as you can.
So token maxing is just maximize how much tokens you're using?
Just use as many as you can.
Okay. I'm looking this up.
Many business leaders were projecting throughout most of 2025 pretty much. Just use it however you can. Make things better, do things faster, do more things, but just use some AI. Figure out how to use it. And it was just this very blanket command, very vague command to just use it as much as you can. Because this was this amazing new technology. And really, it was like just using it. Business leaders could kind of point to that as, oh, look how we're advancing. Look how much we're progressing.
But I guess in terms of token maxing, I definitely, we also sort of at where I work got a similar message, which is just like, here you go, use it as much as you can, blah, blah, blah. But then after, not too long, some of my other colleagues, I haven't experienced this quite yet, but like they were getting notices being like, you're shut out for like the next hour. Cause like you've already met and you're like, oh, this is a thing. Like I thought we were just going to be cranking this thing up, but they're, monitoring how much you're using it. So,
And so that's exactly what I think is one of the clearest signs of we're seeing some price pressures due to AI directly.
That's what I mean. I think like tokens is going to be part of our basket of goods or something that they're going to start tracking. Like inflation on token. Like, that line that you showed me, like showing every little itty bitty bit of the economy at the very bottom, they're going to add one called tokens.
That's definitely the shift that we're seeing now, though. People are starting to get cut off. So one of the funnier indications was Microsoft was doing the same thing, and they basically saw that the usage, engineers using AI, the cost of per engineer was approaching the price of hiring a new engineer. So it was just
right,
getting massively out of control. Like the models we have today really aren't even that much different, I think, fundamentally than, even last year, maybe even the year before. But the difference is how the infrastructure is being built around them. And that's this other point I keep trying to hammer home here. In order to have this big impact in society, there needs to be very specialized for the purpose infrastructure to facilitate very specific use cases to actually show some real effects. So what I mean by that in this instance is the rise of agents. The whole point of those is that they just exponentially increase the cost of using AI. In the earlier days, last year, so far in the past, most of these things, we had Microsoft Copilots in Teams or whatever. It was a single use thing. It was like the earliest ChatGPT days. It's just a chatbot. You can ask it anything and it'll give you amazing answers, but it's kind of, text in, text out. The whole point with agents is that now you design kind of vague workflows, and at specific points along the way, you will run a model instead of a user just saying one thing and you get one model run back. Now, when you're using these things, even in like the basic non-agentic ways, non-specialized products, if you just go to chatgpt.com or just the free version of Claude, even any of these prompts that you're issuing it now have like multiple model runs going in the background. And that's not even counting, the actual agent use where it's like, go search the web. Now each web page, you have to read the web page and then update the model's working information of the question. And so just doing relatively basic things, you can have many model runs that are, you do have many model runs happening. And then after it comes up with an answer, it has to go back and attribute sources to it. It has to check it. It usually will have to update it or, make some change to the response. And all these things are happening in the background. And you just get what looks like the same output as you would before. You say something to it, it says something back. But increasingly, there's so much more going on. And it's not even like the core models themselves that are increasing that cost. It's the way that the models are being deployed, the infrastructure around them. And so that's the end of token maxing as we know it.
Why is that the end of token maxing?
It's just too expensive. Okay. The way we were using it at this, when ChatGPT was new, even in 2025, the economics of using them are just so wildly different now, even though people are using them for, kind of broadly the same purposes.
Right. Yes. It became really clear to me, I know with why like compute is going to be the limiting factor. And I kind of said it because I like bumped into it myself, is even just trying to make these little video clips or something with AI is extremely expensive from like a token perspective, just for a couple seconds. And it's kind of garbage. And then you kind of have to have them do it again and stuff. That's when I became even, more bullish. I shouldn't say even. that's when I became more bullish about like SpaceX and just them saying, okay, we're going to put all this compute because it's just going to be endless amounts of compute. Because like as soon as it's able to do like video or something, then it's going to increase the amount of tokens needed by 100x, 1000x or something. Like text is like nothing. And then once you start getting farther and farther into making like games or something, that would just be, yeah, it's insane. Like you would easily just bump up against the bottleneck, which is compute, I guess. You just don't have the tokens. So people are just going to expand out as far as the bottleneck would allow them, which is compute. And it'll always be pushing up against that, I think, for a long time. Because there's so many more, way more expensive mediums. Music, video, games, those are incredible. But then I guess to your point, it's like an agent, which is having somebody actually just like work all the time. It's like a person running different models just constantly. So, okay.
Yeah, or just even just like really small asks, like go check this thing online every 5 minutes and just, make a decision sometimes. But you can just say something very short and it'll just kick off this huge agent process.
Right.
And you don't even realize just how much that's costing.
Yeah, that's a good point. I would really like to see if they could somehow, part of the response just be like how many tokens were used to make it. That would at least give us a sense.
Yeah. So I've got Claude Code now. It does exactly that. It tells you how many tokens it's going through as it's doing.
How much is it like? How much is like a usual, I don't know, response or something? If you ask it to, what are we talking about here?
It can just vary
thousands,
so wildly.
millions. Yeah, I could see that. And then like, how much does it cost per token? Wasn't there like some Bloomberg thing that showed, or that was like trying to track?
They're typically quoted per million token.
1 million tokens. Okay.
Yeah, I think per million tokens is like
$1.50.
No, like $25 or something like that. Yeah, I think it's like one order of magnitude up. So we're at the point right now where we've got like the current like this mix of just growing pains of the industry maturing, like I was saying, with all of the infrastructure spend and build out of all these data centers. That costs a lot of money. And then just running them. I think as consumers, like I tend to use the more advanced model because I'm like, well, why not? I'm paying $20 a month. Let me just use the best one.
Yeah, right. Yeah, always. It doesn't matter like what it is. Yeah. It's like, yeah, I mean, you use Mythos to rename a folder.
Yeah. Yeah, you saw my meme.
Yeah, that was hilarious. Yeah.
Anthropic, for example, they're more enterprise focused. They've fully moved to usage based pricing, and so like in my little Claude window at work, there's a new tab that gives you the breakdown of like your daily or weekly spend by which model you were using, and or what kind of tasks it was doing, and all this different stuff. But
yeah, that AI voice thing that I was using, that I was really enjoying. I thought was really good. 11 Labs or something. It's got a little like you have 30,000, and every time you give it something to like change the voice, you can see that number just go down. I think that's how much you have to use in a month. And like doing like a 10-second, clip or something might cost a couple hundred or points out of the 30,000. But it sucks to see that like go down. I saw the same thing with Gemini. I just kind of have that because I have like the Google One or something. So I got a bunch of photos and stuff, and they're like thrown in Google. And I tried using that. I made like a 10-second clip, and it's like up 20% of how much you could use gone in like a day or something. I mean, they're definitely slowing you down. And Grok does the same thing too. I like Grok is kind of screwed up because you ask it to make a picture and it'll just keep making pictures. It doesn't just show you one. It shows you just a ream of it'll just keep going, I guess, until you hit stop. Cause like I would have it go and then it would just keep going. And then it would just be like, oh, you used everything you could. I was trying to make like one picture and it gave me like 50 that I didn't ask for. And then it said I couldn't, and I maxed out how much I could use. So they're all doing it.
So we're like in the middle of this shift
Yeah.
right now. So
Yeah.
companies are getting charged more for it and consumers are getting throttled for it. I mean, long term, I do think it's going to be at least disinflationary. I don't know if it's going to be fully deflationary or not, but right now we're at this weird middle ground where it's really expensive to build the AI and much more expensive now to use the AI. Just prices are going up all around. So given all this, like, it really puts the Fed in kind of a uncomfortable position. Now AI is producing its own inflationary pressures. They don't want to lower rates prematurely and exacerbate that demand even more, but they also don't want to raise rates at a time maybe where you kind of where this build out is really getting going.
Right. Yeah. Well, see what happens.
This has been another episode of the Root of All Evil podcast, another riveting discussion on inflation and AI. I'm Joe.
I'm Luke.
Thanks for joining us, and we'll see you next week.
See ya.